imagine what they get it.
Oh yeah, they getting cheese, bro. Aiden Ross was showing he got like 500 racks in a month, bro. You ain't see that video?
No, I remember. No, I already knew he was tweaking because I remember years ago, first time ever, I was like, let me see this Aiden Ross nigga. Everybody looking at him.
Yeah.
Dude, this nigga was getting $20 every second of his stream to the point where I'm like, dude, this has to be an infinity glitch.
Yeah, bro. It's
He getting $20. This shit kept popping up. I think he stopped doing it because this shit damn near annoying, bro. You can't even watch the stream. 20, 20, 20, 20, 20, 20. And I think it only fell with the highest pay per second.
He gets paid off of different stuff. So it's like
I don't know, but just a simple fact that you getting $20 every second, that's ridiculous, bro. For hours.
Nah, it is, bro.
That's ridiculous.
Then he made 150 off streaming, but when's the last time he streamed?
Yeah, I don't even get that. Nigga had the subs getting some payouts.
Basically, nah, I ain't gonna lie. Them they was going dollar for dollar, bro. They was putting money in my pocket, boy. That's why I kept hyping them up. I was like, hell yeah, keep going back and forth, nigga. Y'all got that ego contest. I'm getting paid off of that shit, bro. Like, I was not mad at it.
Clip out of that.
Nah, for real. I mean, I still can. Hold up. This is part 3. Alright, bet. We about to get popping. I just had to post all this, man. This one I wish I had an assistant, bro. That would be so clutch.
And get shit ready from.
Nah, for real.
Great.
Alright, cool. Alright, bet. Let's get it, bros. Okay, so let me make sure I can share my screen with y'all so y'all can see what I got going on, too. And then, actually, before we do that, can y'all share y'all screens? I want to see the examples that y'all found for those 4 types of market conditions that we talked about. Who wants to go first?
Well, I know me and I speak mine and Abel's already in the chat.
Oh,
Unless
bet.
you want us to do it that way.
No, that's cool. I didn't know you sent it in the chat. All right, bet. So let's look at Abel's. Okay, consolidation, expansion, reversal. Okay. So the only thing you're missing on here, Abel, is the retracement. So I'm gonna share my screen real quick, and then all I want you to do is just tell me where the retracement will be. That's the only thing that you missed. So let me pull this up. Where is it? I be forgetting how to share my screen on here. Okay, here we go. This one. All right, you can see my screen.
Yeah.
All right, so you had the consolidation correct. You had the expansion correct. The reversal is correct. So where on this chart is there a retracement? So keep in mind, a retracement is when price expands first, and then it retraces its steps from that long aggressive movement before continuing in its given direction. So where do you see that on here?
So on that last arrow, I hear myself.
On the last arrow?
Yeah, this is gonna be annoying. So on the other side of that arrow.
Over here?
So like, no, other side. So, yeah, like around there, and then the drop.
Exactly. So this short-term run up right here is the retracement. So that's the only thing that you missed. But everything else was perfect. So you did good with the consolidation, great with the expansion. You see how it consolidated first and then it dropped? So if you guys looked at the market today, it did the exact same thing, right? So this stuff repeats itself all day, every day. So good job, Abel. You know what I'm saying? W's in the chat. If I had if my soundboard was working, bro, I'd clap for you, but I can't do that right now. All right, Benny, your turn. See what you got.
T-Banks, booty meat.
Hey, yo. Bro, what the fuck? Yo, y'all niggas funny, bro.
I don't know whose mic is that, but I'm hearing myself talk. Same thing Abel was saying.
Oh, I think it's because I'm sharing my screen. It's gonna go away once I take this off.
Okay. So I'm in the consolidation.
I'm looking at it right now.
I did that. Yeah.
Okay. Let me see. So your consolidation is correct, but your expansion and your retracement aren't as obvious on here. So I'm gonna show you a better example. So can I annotate this right here? Will it let me? How can I? Or here, I can take.
I don't know if it will let me.
Maybe I can take a screenshot. Maybe it'll let me do that. Let me see. All right, let me stop sharing this screen, and then let me share my other screen, because maybe it'll let me do it this way. Back screen 2. All right, y'all can see my other screen. All right.
Yeah.
I'm gonna see if it'll let me pull it up. So go to pictures, screenshots. I hope it lets me annotate it. I've never tried that. I've never tried annotating on here before. Let's see. All right, cool. You can see your picture.
Yeah.
All right, bet. So where is the drawing tool? They gotta have one somewhere, right? What is this? Browse, edit. Yeah, I guess this one. All right, cool. So markup. Okay. All right, bet. Yeah, shot a little thick. There we go. Okay. So your consolidation right here is correct. This whole thing will be a consolidation though. Okay. So one thing I want you to keep in mind is a consolidation is defined as price moving back and forth between a defined high and a defined low. So what I mean by that, if I were to draw a invisible line right here, notice how price stayed in between these two areas, right? It did not break from either side of either what they used to call the support or the resistance, or the floor or the ceiling, okay? So retail traders, I'm giving you guys a little bit extra right now. They normally trade off of support and resistance, but price is not based on that. So a lot of people, they lose money because they depend on the wrong concepts. The cool thing is we can just use quote unquote support and resistance to just identify a consolidation. So because price is bouncing in between these two invisible zones, so to speak, we understand price is consolidating. Here's another example, right? I'll do this one in orange. So you can see how price is just going back and forth, right? Between these areas. And then when price shot up through it, this right here will be the expansion. Okay, so I'm gonna put E for expansion. So when price shoots, it's like it's gonna be very obvious to see, and I'm gonna give you another example here in a second. But whenever price clearly breaks away from that zone completely, that's how you know that is an expansion. Am I making sense?
Yeah, you're saying that. Yeah, it's going through the support.
Okay,
You
so
have that high right there and the low right there. So it's currently in the orange picture. You're in like that zone. So that's gonna be, and it consolidating, and then when it shoots up past that whole up part is maybe the expansion.
And keep in mind, it can expand up or it can expand down. Honestly, think about it like this. Anytime price is consolidating, it's literally ping-ponging within a zone. If you can identify, like, oh, price is just going back and forth, you're in a consolidation zone. Or when price is, quote-unquote, moving horizontal or sideways, price is consolidating. When price is clearly moving up or clearly moving down in strong, hard momentum, pause, then that's how you know that it's legit. You know what I'm saying? That right there is classifying it as an expansion. And then a retracement would be, let me see if I can zoom in. Well, let me do that. Okay. So a retracement would be like, you see how price went up and then it came back down into these, let me see if I do shapes. Maybe it'll let me. Okay. Right there, that little zone. So this little pocket, this imbalance, you see how price retraced into it and then catapult it back
Yeah.
up. So anytime price is moving hard in one direction and then it softly pulls, it doesn't even have to be softly, but a short term pullback, whether it's bullish or bearish, and then it springs back, that's considered a retracement. So again, a retracement is defined as price when after it expands, it retraces back into an imbalance or inefficiency and then continues in its given direction, right? So that's how you define it. So yeah, this is why it's good. This is why I have you guys do these exercises, because I want to make sure I give you guys a clear understanding on what these terms mean. When you guys have a clear understanding on what these terms mean, reading the market becomes a lot easier. And when reading the market becomes a lot easier, your your projections on the market start to become more consistently accurate. Make sense?
Yeah. So right here it expanded, and then that when it starts going bullish, the first time when it retraces back to like an inefficiency spot, and then goes back towards up, so it'll be going back towards bullish.
Yeah.
Or bearish.
Think about like jumping on a trampoline, right? So let's just say you're starting off on the ground. You're gonna jump up in the air. That's the expansion. When you land on the trampoline, that's the retracement. And then when you shoot up higher, that's the expansion being continued. It's the exact same thing.
Okay. Yeah.
Bet. Cool. So yeah, Jordan, did you have
How
some?
about the reversals on that one?
Nah, but I can share my screen though and show you.
All right, bet. Yeah, I was gonna say, looking at yours, you didn't have a reverse. Well, you didn't have a clear reversal, but there still are some in here. I'm gonna show you a more clear example on my screen because I think it'll be easier for you to start off reading stuff like that. But yeah, go ahead, Jordan. Share your screen.
Oh, y'all can see?
Yeah.
Alright, so we have the consolidation right here.
Wait. Hold on. Alright, you good, bro?
Alright, you see my mouse?
Yeah.
Alright, so we have the consolidation right here.
Okay.
And then we have this is the expansion, but it's going down. Or this expansion right here.
So yeah, I was gonna say try going down to a lower time frame. It'll be easier to read. So go to like the 1 hour.
Alright.
And then if you want, you see that little gear icon. Look on the Y axis, and if you go down to the very bottom, there's like a little wheel. It's right there in between. Yeah, now go all the way to the right. Keep going to the right. Right there. Yeah, click on that, and then hit reset price scale on the very top, and it will readjust your screen. There you go. Now it's more clear.
Okay.
So yeah, show me what you were talking about.
But damn. Why is it going like that? How do I move it like just regular?
Yeah, there you go. And then if you wanna stretch it out, grab the numbers on the very bottom. Like grab the time and then drag it left and right, and you can like adjust it. Same thing for price. So grab the Y axis and drag it up and down, and you're gonna see it'll compress or stretch your screen.
Oh, okay.
Yeah.
Yeah, let me try to find one.
Yeah, there you go. Drag it out a little bit more so it'll be more clear. You can see the candles easier. Yeah, and then drag your screen back over to the left so you can see price action. Because I saw some good examples over there.
Like this?
Yeah. All right, bet. So you were saying what? Tell me again.
Alright, so would this would be the consolidation right here,
Yeah, that is a form of consolidation. That's right.
and then this would be the expansion.
Yeah, that bar up.
Oh.
Yeah, that whole run up. That's an expansion.
Yeah, and then this would be the retracement,
Yep.
and then it's a reversal right here.
So no, you actually you had a reversal earlier. If you go back to the left where that red candle is, yeah, you see that row of red candles that are
Right
falling
here.
down. Yeah. So you see how price went up first and then it came back down out of that consolidation.
Yeah, right here.
Mm-hmm. That's another example of a reversal, but the only difference is on that one, it did not take out the high first. So maybe a more clear example would be like, let me see, scroll to the right, Or actually, no. Stay where you are. Go back to the left. You see that long candle at the very top on the very left? Yeah, zoom in on that right there. Yeah, keep zooming in, keep zooming in, keep zooming in. This is a more clear example of one. So notice how you see that long red candle right there where your mouse is right now? Yeah. So look to the left. You see how that short-term high, it went right above it? Like it just bumped that high like a shark's fin coming out of water, and then it went right back inside.
Yeah.
So if you were to draw a horizontal line from the peak or the top wick of that candle, and you were to draw it outright, you're gonna see how that long red candle, 2 candles after, it bumped the high of that candle, and then it started tanking back down. That right there is an example of a reversal. So it's after price takes out liquidity, and then it changes its initial direction. So yeah, those are good examples, bro. Yeah, clap it up for my boy JoJo, man. You know what I'm saying? Clap it up for my dog. Okay, bet. So let's pull this up real quick. All right, cool. So one thing I wanted to go over today was just it's gonna be a quick one. It's gonna be a very simple concept. I'm just gonna go over something that we call I blank for a second. Oh, it's something that we call premium and discount, right?
Are you still streaming?
Yeah, you can see it.
Nah.
Oh wait, my fault.
No, yeah, we can't.
Oh, you can see it now.
You know.
All right, cool. So we're gonna go over something called premium and discount. What that means is that price has boundaries of how do I say this? Price is defined. No. Okay, here's a better example. So sneakers, right? We all know like how the sneaker game works. Any business in general, especially like in something like sneakers or clothes, you want to be able to be profitable. You want to be able to buy low and to sell high. Now you have to be able to understand what's considered high and what's considered to be a low price. It's the exact same thing when it comes to trading futures. So the best way for you to be profitable, you want to be able to find the lowest point that you can, get in that entry, and then ride it up high to be profitable. And if you're going to sell it, you want to sell it at its peak. For example, if I compare it back to sneakers, whenever some new Jordans come out, the goal is to get it for retail. That's the lowest price that you can get it at, right? And then you want to sell it at resale price, which is triple which is triple what it was listed for. Make sense?
That's literally what I do.
Exactly, yeah. So that's why I think, Jordan, you'll lock onto this concept a lot easier. And the way that it's going to translate over to your day trading is going to really do numbers for you. So whenever you have a price run, right? A price run is literally just a price moving in one direction without changing. So for example, this right here is a price run. Like this entire run up, right? So the way that you can measure premium and discount is by using something that we call a Fibonacci tool. It's just a measurement tool that literally tracks the percentage of distance. So you put it at the very bottom of your price run. Oh, that's the wrong one. You put it on the very bottom of your price run, and then you put it to the very top of your other price run, or of the other end of the price run. I personally just like to expand mine. So let's do it like this. Expand to the right. You know what I'm gonna do? I'm gonna clear all this off so y'all can just see that, because I think it'd be easier to see it that way. So we're gonna go from the low to the high. And then this is how simple the concept is. Anything above 50% or this red line, so the percentages are right here. So 0.05, that's just 50%. This number right here is just giving you the numerical value of what 50% of this range is. So 50% from this low to this high would be $21,361. Make sense?
Yeah.
So if you're looking to go long or you're looking to buy, the goal is to be able to find a PD array. A PD PD array just stands for price delivery. Okay. If you want to find any type of catalyst for you to go bullish, it is ideal to find it in your discount, right? So again, let me put this on the screen. So you have premium, which is anything above 50%. And then I should say 50% or equilibrium. Those are interchangeable terms. Interchangeable terms. Equilibrium. And then you have discount, which is anything below 50% or equilibrium. Premium, which is the resale Alright, cool. And then what I'll do is I'll make this in red. No, I just want this. And put this in green. Oh, let me do that? Oh, that's ass. Hold on. Alright, cool. So anything above 50% is going to be premium. Anything below 50% is going to be discount, okay? So I want you to notice something. So do you see how from this price run up, price dipped into a discount and then it rallied back up higher? Do y'all recognize that? So the reason why this is ideal is because banks are low-key just like niggas, right? They ain't trying to spend no fucking money, right? But the way that they do it smart. They want to get the most for their money. And the way that they do that, they buy low and they sell high. This is one method on being able to read what they consider to be high and what they consider to be low. When you're able to get price runs or PD arrays in a lower time, in discounts, it gives you a higher probability of having a higher price run when price continues in that direction, right? So for example, let me go back to 15 minute because I think that's where I saw it. Yeah, this fair value gap right here, right? The reason why this one would hold more weight is because it is in a discount and it's not in a premium. So sometimes people might ask, oh, well, there's a fair value gap here, there's a fair value gap here. You're right. But the reason why this one would hold more weight is because it is in a discount. So when price comes back down into here, it's most likely going to want to spring back up because of where it is relative to price. Am I making sense?
Yeah.
And you know the fair value gap again?
Yeah. Hold on, let me go back. Make it a little bit bigger. So a fair value gap is literally just when price has an empty space between two candles, right? So let me put it like this. So you can see here we have this candle, we have the second candle, and we have the third candle. Notice how all of these other candles, there is an opposite price bar in between it. Meaning if there's a blue, then there's a black. So if it's bullish, then there's bearish price next to it. Whenever it's too bullish or whenever there's gaps in the market, price is going to look to fill in those gaps. Think about painting a wall in a house. Let's say you have a paint roller and you just go up really fast on the wall with the paint. There's going to be gaps in the paint along that wall. So the way that you fix that is by dragging your paint roller back down into those gaps to fill those blank spots. It's the exact same thing for price. Look at this like paint. When the price goes up too fast, it leaves gaps in the market and it looks sloppy. So now they got to come back in and refill it. Does that make sense?
Yeah, that makes sense.
So that's a good way for you to be able to for you to train your eyes to be able to see stuff like this. So when you see PD arrays like this, you pair it with time to be able to understand high probability when it's going to interact with it, right? So for example, one thing that I said earlier, you remember how we're always talking about the macro times. So it's always like that back half of the hour leading into the first 10 minutes. So in this case, it would be from 250. Or no. Oh yeah, the lunch macro is different. My bad. Oh, this is a different one. Let me go back to the 5 minute. Or you know, let's go to the 1 minute. It'll be a little bit easier to see. 1 minute. 315. Where is it? Here we go. Okay. So the PM macro goes from 315 all the way to 345. So right about right here. So you can see how if I were to put some bars around here, put a bar around here, you can see how price had that long price run during this macro time, right? And then that's when it also started its push back up. So this is how you can use everything that we're teaching all at the same time. But now let's pull it back a little bit, right? So I said whenever price is consolidating, what should we expect afterwards?
Expansion.
Okay, so let's bring it back all the way back to the beginning of the day. I just want y'all to see how like you compare all of these concepts to really start building a trading model. Okay, so 9:30 open was right around here. Let me click on this for you. Abel, what are the 3 questions that we ask ourselves before we take a trade?
We where is price currently? Where did it come from, and where is the price likely to go next?
Okay, so if we're at 9:30, right? Let's just say we see this right now. Let's go through each question. Question number 1. Where did price come from? Okay, so it came from lower pricing, right? Which means it's moving bullishly right now. Then you can also see that it's coming from a liquidity sweep right here. So let me pull this up. Benny, what does a liquidity sweep most likely mean for price?
A liquidity sweep.
It's one of the 4 market conditions.
Oh, that would that say expansion? I was gonna go with expansion, but that means that an expansion occurred.
No. So when you see a liquidity sweep, you need to be expecting a reversal.
Oh.
Reversal, right? So liquidity sweep is just a reversal. So when I asked Abel where did price come from, price had came from sell side liquidity. It had taken out sell side liquidity, which means I need to be expecting with higher probability price to reverse. So if it just came from selling, I need to expect it to buy, right? So now we just answered question number 1, where did price come from? Question number 2, where is price at right now? Right now, price is just consolidating, which means I need to start expecting a what soon, Jordan?
An expansion.
Exactly. So now that I have these 2 things in mind, right? I understand. Let me take this off because we're not going to use it just yet. So now that I understand price is consolidating, we just came from taking out a short-term low back here, and I'm expecting higher prices. Now I got to answer the 3rd question. Where is it most likely going to go? So we understand that price targets 2 things. Price targets liquidity pools, and price targets imbalance. That's it. So if y'all don't have that written down, let's write that. So price targets 2 things.
Elliot, are you recording this right now?
Yeah,
That I'm gonna just have to watch what I make back.
it's all good, bro. All right, so liquidity pools and imbalance. All right, so price targets 2 things: liquidity pools and imbalance, right? So last time I said you can find a liquidity, or you can define what as liquidity. What are characteristics? There's only 2 characteristics that I pointed out. What are the 2 characteristics that you can use to identify liquidity? Anybody can speak on this if they remember it.
Is it a reentractment?
No. Somebody else.
Can you repeat the question?
I said there are two characteristics of liquidity that I told you guys to look for in order to be able to identify it. What are those two things? If you
I might
got
be wrong, but I'm just going about guess. Is there like if there's any like liquidity voids or something in the past?
so that would be considered an imbalance. So you're moving in the right direction.
Okay.
Yeah, so basically, let's just to recap, the way you can identify liquidity, and what I'm gonna do is I'm gonna do a video, or I might just do a stream one day where we just practice like liquidity, because I'm just giving you guys more general concepts right now, and then once I go back into it and become more and dive deeper into it, when we go back and review everything, you're gonna see how they all work together. So ways you can spot liquidity. How to spot liquidity. It's two things, right? It's either going to be relative equal highs or lows, and then previous highs or low. So for example, if price was building up right here, my eyes need to start looking at the left, right? Because this is all old news. So price is going to react off of what it did in the past. So now I need to be asking myself, okay, where do I see relative equal highs? Or where do I see, let's move this over here. Where do I see relative equal highs, or where do I see a previous high or low, or a previous price swing? I should add that in there. So a price swing is literally just price changing directions, right? So for example, anytime price goes down and up, this is now a low, this is now a high, right? Price goes down and up, this is now a low, this is now a high. Price goes from up to down. There's actually multiple in here. So price goes from down here. So this goes from a high to a low, to a high, to another low. Am I making sense? Look at it like stairs. So the top of the stair is gonna be the high, and then the crevice of the stair is gonna be a low. Am I making sense?
Yep.
Okay. So would this be a high or a low? Yeah, right here, where my mouse is hovering. Say it again.
It would be a low.
Okay. Would this be a high or a low?
That would be a high.
Okay. Would this be a high or a low?
That's a high.
Would this be a high or a low?
Low.
All right. Would this be a high or a low?
A low.
Low.
Is this a high or a low?
High.
All right, exactly. So see, it's not that hard. It's just your eyes are gonna be able to identify it, right? So now, if I were to ask myself, if price is consolidating, and I understand price is looking to go bullish or it's looking to go up, I understand price is going to have a draw on liquidity. What that means is that price is going to, it's like a magnet. Liquidity pools and imbalances are literally magnets for price. So now I gotta identify, where is that magnet? Well, you just start looking left. Where's the most recent high? Boom, right here, right? So what you would do is you would mark that on your chart. So here's a recent high. You're just gonna draw it out. So I understand the target price is now looking at, and then I personally just label it so I know what I'm looking at. Now I'm gonna teach you, when we start going into liquidity more in depth, I'm gonna teach you guys some more tips and tricks with it. But for right now, I want you guys to just understand the general idea behind it. Okay. So like I said, price is going to start hunting this high, which means anybody who is profitable on this sell right here, their profits are now slowly eroding the higher price returns to its entry point. Make sense? So when price goes back above it, now anybody here is either going to get stopped out if this is where they put their stop loss, or now their entry is going to be negative. Are you guys following me?
Yeah.
That is why price attacks these areas, because like I said, anytime somebody makes money from day trading, you're basically like it's all a transaction. For there to be a buyer, there has to be a seller. For there to be a seller, somebody has to be buying, right? People that was, you know what I'm saying, moving that weight, it's the same thing. You ain't making no money if you ain't got no customers, and then you ain't getting no customers if you ain't got no supply. So it's like it all like works together. Like this is not special just to day trading. This is literally any single business, right? So when you understand that, it kind of helps you put all of this into perspective. At least it did for me. So now that we understand that, this is a recent what, high or low?
That's a high.
Okay. And then the next characteristics of a liquidity pool is relative equal highs or equal lows. So if I scroll back here, is there a point in this consolidation zone where two highs look relatively the same height or two lows look relatively the same height? But actually, let me make it easier. Because we're going bullish, you want to look for two relative equal highs. So do you guys see anything right here that looks relatively the same height?
Right before that gap.
Exactly. So this high right here and this high right here, even if you were to measure it, so like I said, these numbers right here, it just represents the open of the candle, the high of the candle, the low of the candle, and the close of the candle. So this is how you're able to identify, right? So what's the high of this candle? Abel, tell me what the high of this candle is. Read out the price.
21,407.50.
No. It'd be, wait, say it again. Say it again. I'll make sure.
21,407.
No. That's the open. That's the open. So you see how to the left of it, it has O. O just means the open of the price. H is going to be the high of that candle. So what is H for this candle that I'm hovering over? Or the high of that candle? Read me the price value. Just go one number to the left or to the right. That's all you got to do.
I don't even know what number you're talking about if it's not the price.
No, it is the
He's talking
price.
about on the very top.
So, Abel, do you see what my mouse is doing?
Oh, okay.
Yeah.
I
Right
didn't-
here. No, yeah, you're good. So, what is the high of this candle right here?
21,412.75.
Okay. Now, what is the high of this candle right here?
21,412.
Exactly. So, do you see how close in price these highs are? This is where price is going to want to be drawn to, stuff like this. So, whenever, like, your eyes are just going to automatically be drawn to it. Like, whenever price has highs or lows that look relatively the same height, price is going to be drawn to these areas. So, if you're going to be looking for liquidity, you need to mark that up. So, how I do it, I just mark both at the same time. And you can see just how smooth that is, right? So, you see how here, if I were to drag this further to the left, this right here is jagged, right? Price went up, and then this one is lower. These are not relatively equal. However, these two are relatively equal. Like, do you see how, like, you know what I'm saying? It look like butter right across the top. Like, it's just like, you know how niggas get that high top fade? It's just real clean up at the top. If you see price looking like a high top fade, that's liquidity. You know what I'm saying? That's basically how to identify it. And then you see how price went right up through that thing. You know what I'm saying? So now we can mark that as buy side liquidity. So this is how you're able to identify what we call directional bias. Directional bias is literally exactly what it sounds like. I'm biased towards a direction the market is going to move. So I want you guys to keep in mind how I am compiling everything I just showed you guys in the last couple of days. It may sound like a lot at first, but this is why it's important that you guys go back on your own time and practice these concepts. Because you're going to realize probably in the next even 2-3 weeks of you even consistently trying to even find this on your own, how much it repeats and how easy it is to identify. Once you're able to get to that point, that's when day trading starts to become a lot easier. Because now you understand where it's going. You're just developing the patience and the discipline to wait for when it's going to head to that direction, right? So, for example, if I'm trying to catch a bus that leaves at 10 o'clock, okay, let me give you an example, right? Let's say I'm trying to go to DC, and the bus from Charlotte to DC, it leaves at 11:30 a.m. Why am I gonna come show up at 7:30 when the bus ain't gonna come until 11:30? I'm out there just wasting time. I could be asleep. I could be, shoot, I could be eating. I could be with a shorty. You know what I'm saying? That's another 3-4 hours. I can just be doing whatever. So it's like, if I wait for when price is going to get to that point, now I'm going to be able to catch my ride to my destination. But when you show they're premature or you show they're too late, you wasting your time. So it's literally the exact same thing with trading. That's why little things like these macro times that I'm giving you guys, or these time frames to use, or these time of days to really look for a price to start spooling or start charging towards a direction. I'm giving you guys the time price is going to make these moves. You see what I'm saying? And I'm also giving you where exactly these moves are heading to. So this isn't like luck. I'm showing you guys specific characteristics to look for in price to be consistent with your results. Because the more you practice this in your demo account first, you're going to become more confident, because I'd rather you blow a demo account versus your real money. And then once you start getting more consistent with that, that's when you start putting in some bread and you start making some money off of these concepts. But I want you guys to just see how consistent all of these concepts work together. So again, I'm just going to review it now that we got everything in play. So we're going to start off at 9:30, right? We can see, let's go down to the 1 minute because it'll be a little bit noisier. And I want you guys to kind of see why I don't want you to get tricked out of your spot. So you see how price is just going sideways? It's not picking a direction. This right here, consolidation, right? So all of this, everything in this orange box, everything in this orange box is consolidating. That's all it's doing.
Yeah.
Right? So if I see this at 9:30, I'm like, all right, bet. I don't need to be popping a trade right now. Now, if you ask myself why, it's because the price ain't going nowhere. You know what I'm saying? So when I understand that, it's like, okay, cool. I need to wait for the expansion for price to tell me where it's going to go. And I can time it by using the macro times, right? And also, let's pull in some of these other clues that I said earlier. So we talked about how price came from a liquidity sweep, a bearish liquidity sweep. And I understand that liquidity means what, Jordan?
Liquidity is like how you
Starts with an R. If I see a liquidity, I need to anticipate a what?
reversal.
Yes, sir. See, my boy's getting it, man. My boy's getting it. There you go. So which means if price just came from below, I need to expect the price to go above. So if I'm seeing price consolidate, I'm already having the pre-notion I need to, with high probability, not every time because nothing in life is ever 100 proof, but with high probability, I'm talking like 90, 95%, price is going to want to go up. See what I'm saying? So now how do you not get tricked out of your spot by getting in too early or getting in too late? You pair it with the macro times. So if price has been consolidating all morning, I can understand price is most likely going to push bullish in that macro time, which is between 9:50 and 10:10, or between 10:50 and 11:10, and we can see that's exactly what happened, right? So let's pull up that horizontal line again. So we got 10:50 right here, and then it hit TP right there at 11:50. Oh, I'm sorry, 11:10. Let's go back down to the 1 minute so I can see a little bit easier. Y'all see what I'm talking about?
Yeah.
So I want y'all to see how right there, bro, look. This right here, 10:50. Price just started going up, up, up. Like, bro, like down to the candle, bro. Like down to the candle. You see what I'm talking about? Like, I don't know. I feel like this stuff is just cool as hell to me, bro. Because once you understand it, like I remember when I first like realized what I was actually seeing, I was like, bro, I felt like I just hit the lottery. I said, oh, these niggas done messed up. Yes, sirski. Nah, for real. That's really how I felt though. So now, like, when you're able to consistently see this, you know what to anticipate. So I want you guys to, again, like, I know I'm repeating myself, but I want you guys to understand, like, I'm not doing anything extraordinary. I'm just piecing together these basic concepts to be able to get a consistent result. Because one thing I also want to show you, you don't have to catch this entire run up. You don't need that. Like, you can get to a point where your capital is big enough, you can just go for the first TP. You don't even need all this. Because one thing I want you guys to understand, even though this is the draw on liquidity, that doesn't mean that price has to hit it, right? Because I'm going to teach you guys a concept later on how to know if price is going to hit it or when price is not going to hit its liquidity pools. But like I said, this is what we call the draw on liquidity, which means price is moving towards this direction. So again, that doesn't mean your TP always has to be liquidity, but you know the overall direction price is going, which means if you hit your goal before price even hits this take profit right here or this liquidity pool, you don't have to sit there for the whole thing. Just take your money. Green is green, bro. I just want to show you guys how to get green and how to stay green with confidence. You see what I'm saying? So I've been over talking. Well, I don't think I'm over talking, but I've been doing a lot of talking, and I want to make sure I'm answering any questions, anything that might feel confusing to you guys, something you want me to elaborate on. Like, talk to me. What's going on?
When you put the lines there, like, so those lines stay. Like how? Like, so you like say if you had like a regular chart, like you just have a whole bunch of lines.
Nah, I delete them as I don't need them anymore. So like, once price like clears it, I kind of disregard it unless it's like a imbalance, because sometimes price will revisit an imbalance to use it as another catalyst for something. So, but yeah, if you have these lines marked up, they'll stay there unless you clear them or you adjust them yourself.
All right, so for like your buy side liquidity and sell side liquidity, what's like the clear definition? I don't think you ever went over it. Is that just like a point? Is that supposed to be the point to where it's? I get like it shows like a little bit of like when you're supposed to buy almost, because that's like your range, kind of like the premium and like discounted range, but I don't get like the actual definition of it.
So basically, liquidity is just how to spot a reversal. So a reversal is like when price moves the opposite direction that current direction has taken it, if that makes sense. So like if price is moving up, when price clears these recent highs or these relatively equal lows or anything like that, you can expect it to reverse. Now, how do we look for liquidity and price? The liquidity pools are just above an old high or just below an old price low. So basically what I just showed you. It's like here's an old high.
Yeah, like,
here's an old low.
And the two that those two, right? The ones you just showed me earlier, the 412.
Yeah, you talking about right here?
Yeah, those.
Yeah. So if you're asking like why do banks target liquidity, it's because a lot of people, like a majority of people, were brought up to trade off of what they call retail trading. So basically, it's a lot of concepts that were modernized that basically almost everybody in the trading community abided by, and they knew the levels that people would target. So what they did is they just targeted the levels that people thought were going to make them profitable, and by manipulating those areas, people just continuously lost money. So that's why you're able to identify it in certain ways. So this is what people call like trading with the banks sometimes too. But in all honesty, all these people, they just got all their information from ICT. So, because everything that these people try to like spin off is like from his work, which is pretty crazy. But
yeah, I know. I saw a TikTok the other day. I mean, today actually. It was this nigga was talking about his basically like his setup for the day, and it was all ICT. Like he was on fair value gaps to open and close. He was talking about like everything was damn near the same.
Not
like reversals and all that.
Your number one mentor.
No, for real,
yeah,
because
he was saying all that stuff. Like, yeah.
Yeah, because the thing is, people forget, like, this is an AI algorithm. Like, where you're not trading against people anymore. People don't understand that the reason why banks went digital is because it's more efficient. So if I have an AI algorithm programmed to move price to a specific point at a specific time, it's able to move the market a lot, just a lot easier and a lot faster than humans would. So everything is becoming digital. So because of that, it's algorithmic. So if you know how to read the algorithm, you know how to be profitable. Make sense?
Yeah, definitely.
Just like Instagram.
Literally, bro. Like, or like YouTube. Like once you know the algorithm, you know how to get yourself out there. So you just need to learn the algorithm. And I'm just showing you guys how to read the algorithm. Because people swear up and down like, oh, it's buying pressure, it's selling pressure. It's because the news says this. I can't tell you how many times I have caught a move in the market without even looking at the news. Like I couldn't even tell you what the news nigga said. But I know I smacked TP though. You know what I'm saying? And it's because it's like, nah, for real. Because think about it, like all of this stuff is manipulated. Like if you think the stock market is not manipulated, you're tweaking. Like there's a reason why like people have certain news announcements when price moves a certain way. Like it's just like an excuse for them to do what they were going to do initially. You know what I'm saying?
Yeah.
That's literally all it is. It's just a front. So when you're able to read that stuff, it's like it becomes very exciting because you just understand the opportunities that can present itself with it. So that's why I get kind of passionate about this stuff, bro. Because it's like, dang,
and
man.
then for this,
go ahead.
I was about to say for this trade, you know how you put the fig tool and you can see like if you're in a premium or discount. Did you just already erase it?
Yeah.
Or did you use that? Did you use that for the setup too? I know you put you put at that point right there in the high, but I don't know if I saw like percentage.
So I used it. So I'll show you the trade that I caught today. Actually, I caught this sell right here, all the way down here. So I caught this one, then I caught this one. So the way that I measured it was with that tool. So if I go back to the 5 minute, I'm gonna clear all this stuff out. So the way that I was able to calculate it was I went like this. So I had my low and I had my high, the price run. And I knew that price was already in a daily fair value gap. When price interacts with PD arrays in a higher time frame, they hold more weight, right? So I said that last time. So when price holds more weight, I understand I'm gonna expect a bigger reaction in price from these areas because of the weight of that catalyst that price is interacting with, right? So I understood when price came back up into this right here, I was going to see some form of a retracement right here. And notice price came right up here to the equilibrium and reversed. Like, that's what I'm trying to show y'all. Like, everything I'm showing you, I'm literally just repeating myself. Like, it's just going to get to a point, like, you guys are going to understand it because I'm literally just saying the exact... Like, I've been saying the exact same thing since, like, 2022, bro. I ain't going to lie. I ain't even going to lie to y'all, bro. Like, this stuff has not changed. Like, you think it's by chance that joint just so happened to hit 50%? Like, every single time, bro. It did the same thing down here. It did the same thing down here before it went up. It did the same thing right here when it tapped in. Like, let me show you this real quick, and then I'm gonna go back and answer your question. Where's that 1 hour fair value gap? It was right here. Price just so happened to stop right here at 50%. Let me show you this. Hold on. Bro, you can't tell me this isn't algorithmic, bro. Look. Price stopped right at 50. Like, you see what I'm saying?
Yeah.
Like, that's what I'm saying. Like, when you understand that, like, bro, nigga, I know where you going, bro. Like, you're not fooling nobody. You feel me? So that's why when you see stuff like this, it's like, oh, okay, bet. But kind of going back to your question, okay, E, how did you catch that sell, right? So, like I said, for me to catch a sell, I understand price is going to want to seek a discount area, right? So because of that, I just need to find a PD array that is underneath the midline or underneath equilibrium, underneath 50%. So again, I'm gonna measure it like this, right? So I just measure the whole price run. I go from that price run's low to that price run's high. Okay, so this red line is 50%. So I see that there's a fair value gap here, and there's a fair value gap here. One rule of thumb I got from ICT, he said whenever you see two fair value gaps, always go for the second one, just because price typically reaches for that one first before continuing in its direction, right? So when I was catching my sell, I had 2 TP set. Where is it? So I caught this price run right here. I saw this break a I kind of got it a little bit earlier. I'm about to show it to you. I saw this breaker structure right here. So there was a liquidity sweep right here. This is one on a lower time frame. So I'm just doing the exact same concepts I just showed you. I'm just translating it to a different time frame because all of this stuff works on every time frame. So here's a liquidity sweep. And this low right here, this is a market shift. This gives me confirmation price wants to change directions, right? And then after price came back out of here, all I did was just get in right here at this order block. So, right, these row of candles that made the up move. Oh, I'm sorry, that's the wrong one. It was from over here because it's the down candles right here. Okay, so price broke down here, came back down, it tapped right back up into here. These row of candles right here. You can look at all of these as just like one big ass down candle. So when price touched into it, that's essentially like hitting the trampoline to continue more aggressively in its initial direction. Then I caught all of this, and then I took this one down into, where is it? Was it on the 15-minute? Yeah, I took it into here. I took it in the first fair value gap. Because I noticed like once price hits, yeah, I noticed once price hits the first fair value gap, it's typically going to retrace. So I just started getting kind of smart. I was like, well, instead of me sitting through this retracement just for my trade to go back higher again, I might as well just take profit here. And then after it retraces, just get in again. Because now I'm not giving up all of the profit between this price run that went back into itself. So I took profit right here. Yeah, you feel me? So it adds up over time, and you make more money that way. So then after that, I just got back in the fair value gap, and then I just rode it back down here, down to this line right here. I always say go for low hanging fruit. I got that from ICT too. Basically, what that means is you don't always have to go for the furthest TP. Because you will see there will be times where price won't always hit that TP, and it was like you were already close or you were already in profit, you just didn't take your money. So instead of me holding price all the way down to like this midline, I just go for the entry of it. Because once price crosses it, I'm green, and then I don't really care what happens after that. Oops. All right. Yeah. So I got in right here, took profit right here. Fair value gap, came back down, and I got out right here on this line. So then you can see how price reacted afterwards. So
Okay.
what questions do you? Oh, so what's price doing right now?
It's consolidating. Yeah.
So then what should we expect from this?
We should expect expansion.
Okay, and then should we expect it to be higher or lower, and then why? Why? Give me the logic behind it.
There was two equal high.
Talking about right here.
To the right there, and then kind of right there again, or how do you go?
So if you see equal highs right here, why are you expecting it to go lower?
It just kind of look like it, but
Is your market shift statement still valid in this situation? Is it still tying, or are we too far down too far in time?
So the reason why I would say,
or there's two lows too as well, right? There's a low and another low.
so the reason why I personally would say no is because price had already violated this high again. Like if I were to zoom in on it, this high is higher than this one. Like this is a liquidity sweep. That's why price reversed. See that? It went above it and then it came back down. Revisited it and then came right back down again. So Jordan, this is what I was trying to get at earlier. Like, it's not so much that you had the wrong idea, but I want you to understand like why you're picking that, right? So you already got the liquidity sweep, and then here we got the market shift. So now we got 2 confirmations on why we should be looking for lower prices. But what's the third confirmation? We're at equilibrium, or we're at 50%. So let me do this real quick. Market shift. So whenever price starts consolidating around equilibrium, it's really 50-50. But the way that you can understand the direction it will most likely go to is by pairing it with your other concepts to provide you logic. Now, I'm not saying take this trade, because what did I say is the number one element in taking a successful trade?
In the time.
Exactly. So right now we're in the Asian session, right? This doesn't have as much volatility, and you can see it. Like, these candles are moving very lethargic. Like, they're very small. There's no real movement. You know what I'm saying? It ain't really doing nothing for real. But if we go back to the AM, look how long and aggressive these candles look compared to how price is right now. See what I'm saying? It's a big difference. So that's why I'm saying, like, you'd be waiting at the bus stop hella late. Like, nigga, you in the wrong time zone. Literally. So that's why I'm like, when you see stuff like this, you know what I'm saying? Like, save you some money, save you some headache, bro. You feel me? Just wait till when prices are gonna start doing this thing. But I want you guys to see how you can be reading price. You know what I'm saying? So,
Yeah.
all right, bet. Honestly, I think the homework for tonight, I just want you to be able to show me how to read premium and discount. So for you guys, I just want you guys to give me 2 examples each, one bullish and one bearish, of premium and discount. That's it.
You go over that one more time.
Yeah, I just want one example of each, bullish and bearish, of premium and discount. And also what I'm going to do is I'm going to send that video I got from my YouTube channel in here. It's like, it's from the Scalp It series. I'm going to send that to you. Because if you guys have any questions about it, then I can show you guys how to do that. Shorts.
Can you write the homework assignment on the chart again like you've been doing so I can screenshot it?
Yeah. Give me 1 second. Let me send this to y'all. You always want
I can send it in the. I can send it in the chat.
Yeah,
That works too.
I'm about to drop this in the Tonka chat real quick. So if y'all need a reference, y'all can go back to it.
And then also, I was trying to find Nas on MT4, but it's not showing me the same price that's on TraderView.
Yeah, so that's because of the broker that you're using. So each broker is gonna have like a different price. How do I describe it? I don't know why, but like certain brokers, they just have, like, their numbers run different, but like it's still in the ballpark of the same thing. What I would do is just learn how to read it off of TradingView first. Reason being is because I feel like this is the most accurate. Like, futures trading versus doing it from like a unregulated broker is just I just trust this more. So,
Can I make demo trades on this or not?
I don't know. You know what
I'd rather do trades on the computer, to be honest.
Yeah, I'll be real. I've never done that before. So, you know what I would do? I would just still practice on your MT4 or your MT5, but just practice doing your markups on here. Because you'll still be able to make the same moves. You'll just be able to see it a little bit more clearly on here. I'm sure there is a way you can get a demo account set up for this, but I don't know how. If I'm being honest with you.
Copy.
Or maybe you can get a TradeAvate account. Get you a TradeAvate account, and then well, no, because they charge you after 2 weeks, so no, don't do that. Yeah, I think your best bet is just to practice executing on MT5 or something, or off of yeah, nah, I had to think about it. Yeah, just stick with MT5, bro. At least for the demo account. And then if you want to start trading on the computer, just get a funded account and you can trade on here.
The
Yeah.
Is the Fibonacci tool? Is it a certain
So how you'll find it? You'll go
Which
to
one?
your toolbar right here on the left.
Yeah.
You're gonna see a little mini caret. It's gonna be the third one from the bottom. Hit the mini caret on the right, and then the first one you're gonna see is gonna say fib retracement. And then I want you guys to take a screenshot of my settings, so I can show you guys what inputs you need. Or actually, let me take this out. There's already one open.
Yeah, I think my fib already looks ridiculous.
Yeah, take a screenshot of this. I only use 3 levels.
Yeah.
0, 50, and 100. So take a screenshot and just have yours look like that. It'll be an easy way for you to pick up on premium and discount. Bet. Well, yeah, gang. I ain't gonna lie. That's all I got for y'all boys right now. So if y'all got questions about anything else, bro, y'all just let me know, and then I can help y'all with that. All right.
Yeah.